Hi everyone, hope you guys are all having a great day today, and in today's video I'm going to cover the whole entire market in terms of Dow Jones, Nasdaq, and S&P 500, including the economic calendar. Now I do post these videos up daily, so I highly encourage you to double check the latest video on my channel so that way you get the most up-to-date information. And if you want to be notified when I do upload them, consider following and subscribing so you'll be notified when I do upload them. Before I get to the analysis portion, I'm going to go over the economic calendar. And for Wednesday, September 11th, 2024, at 8:30 a.m. we have the following, which is Consumer Price Index coming out, inflation numbers for August, and then CPI year-over-year numbers, Core CPI, and then Core CPI year-over-year as well. Previously, for example, for the most part, by the way, they're going to be looking at the Core CPI year-over-year, and it came in previously at 3.2. They're expecting 3.2 this time around as well. And then the CPI year-over-year, which is not the core, is going to be 2.9 previously, and then they're expecting 2.6 this time around. So they're expecting somewhat of a drop. Now, mind you, we have the following day, we have PPI inflation numbers, so producer price index, and then next week on Wednesday, September 18th, 2024, we have at 2 p.m. FOMC interest rate decision. Most likely there's going to be 25 basis points rate cut. There's a chance for a 50 basis points rate cut. I would argue the market already pretty much priced in the 25 basis points. So if this inflation numbers for CPI and PPI inflation numbers come in for tomorrow and the day after, way better than expected, then it might boost up the confidence of the market to expect that potentially the Fed might cut 50 basis points for interest rates. Now, mind you, Jerome Powell will speak at 2:30 p.m. on the Wednesday, right after the interest rate decision. And again, Fed Chair Jerome Powell press conference at 2:30 p.m. Now, the last time he spoke, he stated that in essence, that it's basically going to be most likely 25 basis points. Again, the reason why I think the market has already baked that into the market, 50 basis points could be a catalyst to the upside potentially, but I don't think the data points will come in strong enough for 50 basis points. The market might get excited, but I don't think at the end of the day they'll get 50 basis points. But that's just my opinion. Like always, please do your own due diligence and research before buying and selling. Now for the analysis portion, in essence, based off the MAC lines, they're still somewhat showing a little bit of the downside pull down, but they're showing a potential upside flip. So I'll show you what I mean. So if you look at SPY ETF for S&P 500, mind you, closed at $548.79. If you look at the one-year chart, so here is the MAC line. In case you're new to the channel, indicates if we're in a bearish or bullish movement. It was in the or it still is in the bearish movement, but it's potentially could go up. The reason why I'm saying potentially, if you look over here, right, there's a lighter shade of red right here and a lighter shade of red right here. So you could assume maybe that lighter shade of red could be a crossover to a bullish movement. So then upside could be potentially coming. And right now it is not necessarily known fully because we could continue to the downside and then the shades of reds could be darker and continuation to the downside. For the time being, we have to assess it because if, for example, the inflation numbers come in better than expected, the market expects 50 basis points. So the momentum could be to the upside and we could potentially see a reversal testing once again, the all-time highs. So let me just go to the 5-year chart for a sec. Again, this is ETF SPY, ETF for the S&P 500. We have an upward trend resistance line dating back since 2010. Mind you, the market was still going up. Doesn't mean the market's not going up, but every time it went up, it got knocked down, so on and so forth. And we do have room to grow to the upside. Mind you, we are in the mid zone, so we've seen a couple times in the mid zone, it still drops down to the upward trend support level. So we could be seeing that. I personally don't think we'll see that much of a pull down because of election year, but we do have room to the upside. We do have room to the downside. And if I go to the 3-month chart, so that we are at all-time highs zone, I would say. Zone, yeah, basically for sure, because previously in July of 2024 we created all-time highs and then we tried to test them again to break through them fully back in August and September of 2024 and could not, got pulled down. Again, indication of the 1-year chart, you can see bearish movement to the downside ever since. And now the 5-year chart as well, it's still in the bearish movement, but combined with the 1-year potentially going up plus the all has not crossed over to the bearish movement, still technically in the bullish movement even though it has a lighter shade of green. Not technically, it is in the bullish movement. And plus, for the fact that the market could be excited for a 50 basis point rate cut. If that's the case, they could go to the upside. But in essence, in my opinion, I still think it'll be short-lived, where we'll probably see a situation like this, where it could potentially try to come back up. For example, we've seen it in relatively the same zone, right? You can see right here. So we came down to the zone right about here earlier, and then previously, this is back in July of 2024, came down to the zone from the same high too. So back then, from the all-time high of July, all-time high of August, September, dropped down as well back in the July timeframe. Hopefully you can see everything. I'll try to zoom in a little bit closer. And we went up to roughly about $553 and some change. Now, this is the 1 year chart, so it's not going to be exact. There might be small spike ups as well, so it might be a little bit higher. So you could argue most likely it's going to be within this zone that I drew earlier, which is 555, 557. But either way, somewhere around the ballpark, 553 to 555, I would say most likely. And then came back down for a further drop, right? We could potentially see that. So for example, momentum to the upside, market gets excited for 50 basis points rate cut for interest rates. And then we keep climbing up. But then when the decision comes and we only get 25 basis points, since the market already baked in 50 basis points, it'll probably drop down, probably for a shock for expectation of being too high, and then coming down to potentially lower zones, right? That is a possibility. So we'll see. And again, the tech sector could always rally up to. We're not necessarily low for like fully low for the tech sector, like for example, Nvidia, Tesla, but they have been higher before. And you could argue that potentially they could start at one point rallying up for whatever it might be. For example, Tesla, I know that they have sales numbers that will be coming up in roughly a month from now. So that could be a momentum for Tesla, and Nvidia and Tesla are mega cap stocks. So anything that is a mega cap stock and rallies up could carry the market to the upside. So there, again, what I'm essentially saying is there is potentials for reversing these MACD lines into the bullish territory to start rallying up to the upside. Not necessarily full rally. It could just be enough to potentially come back to the all-time highs and then get knocked down potentially. But just FYI. Now, for QQQ, for example, is the exact same situation as SPY. Here's the 1 year chart. MACD line is indicating a potential pull up to the bullish movement, still in the bearish territory, but it's just lighter shaded red. And we've seen multiple times into the Nasdaq. By the way, QQQ is an ETF for Nasdaq. And during this drop all the way from July as well, the whole entire time, it went from red, light shaded red, so on and so forth, and it just kept on still dropping within that time frame, right? The 5 year chart, I believe, is the same as SPY. Yeah, same thing as SPY, where it's just still technically showing further downside. And mind you, by the way, I'm just going to go to the 5 year chart. We're already on it right now. The Nasdaq/QQQ ETF, same thing, just different ratio, is the same thing as SPY slash S&P500, upward trend resistance line dating back since 2010. Mind you, market was still going up, just got knocked down. And then in 2020 to 2022, broke through, but then came back underneath, and we had issues passing it once again. And for the Nasdaq, we do have quite a bit of room to the downside to this upward trend support level. So there is enough room to the downside. But mind you, again, in my opinion, because it's election year, I personally don't expect to ever see this drop during this close to an election personally, but this is just my opinion. And I don't see no catalyst to bring it down that much. You pretty much need a black swan event for that situation to happen personally. But for the downside, like for example, in terms of 1 year chart and then the 5 year chart being in the bearish movement, I do expect a pullback, like somewhat of a correction, but I don't expect a major crash. Right, so just to be clear on that. Now, for the all chart too, just like the SPY, this is again ETF QQQ, ETF for Nasdaq. It's the same thing. It's technically going to be crossing over. It's just it's not guaranteed, and it's still in the bullish movement. For example, like we've seen before, in the bullish movement doesn't mean it's going to cross over in the bearish movement. Just like for example, if I go to a 5 year chart, when it is in the bearish movement, even though it gets light shade of red, it doesn't mean that's going to cross over to a bullish movement, just FYI. And then for Nasdaq, in case you're new to the channel too, by the way, we were at the all-time highs back in July as well, but we tested the upward trend resistance line in 2010 level as opposed to the all-time highs. So here's the line dating back since 2010. Might be difficult to see, but just to visually show again, this upward trend resistance line since 2010, and then it crosses over. We were right there at one point. Hopefully you could see it. And yeah, it came back ever since. And technically it could be pulled down, but again, market expectation could be to the upside if the numbers for inflation numbers, CPI and PPI inflation numbers, come in favorably, where it beats expectations by quite a bit, and the market gets excited that 50 basis points will be happening, right? Again, in my opinion, I don't think it will be. My opinion is 25 basis points personally, but that's just my opinion. And then for the Dow Jones, it's a little bit stronger to the downside almost. Mind you, closed at 40,736 points. And if you go to the 1 year chart, it is in the bearish movement and has not gotten the light shaded red. It's still the stronger, darker red. The 5 year chart is not crossed over to the bearish movement, but it's still getting closer and closer, it looks like. And then the all chart is the same thing as SPY and Nasdaq, or S&P 500 and Nasdaq, where potentially could cross down to the bearish movement, but it's still not quite there. So again, potential reversal to the upside could happen. Now for the Dow Jones, the same as S&P 500, created the all-time highs in July. We tested them in August and September, and actually broke through too, mind you, but we just got pulled down to the bearish movement for the most part, and now we're potentially testing to see what's going to happen. It's hard to predict when the data points are coming out for inflation numbers, essentially for tomorrow and then the day after in terms of CPI and PPI inflation numbers. To predict the numbers and the reaction, it's quite difficult, but in essence, for the time being, technically the graphs are somewhat pointing to like a 50-50 mix, but then long-term pull down if the market doesn't get what it wants. Essentially, it looks like it wants to get, it's excited to get 50 basis points, in my opinion. It looks like if the numbers are favorable to the inflation numbers dropping further to get to the Fed's 2% target, by the way. That's the thing. But yeah, that's basically it for today's video. If you found it beneficial, consider dropping a like. It does help with the channel, so thank you so much for that. I do appreciate it. And if you want to be notified when I do upload my next videos, consider following, subscribing, so you be notified when I do upload them. Thanks again for watching. Take care. God bless and peace.